Mr. MB tried to use his construction business to evade $2.8 million in taxes, as he admitted, in April of 2024. Let's see what happened. From April 2013 through December 2017, Mr. MB ran an off-the-books cash payroll scheme. What exactly does this mean? As an officer of his business, Mr. MB was responsible for filing his business quarterly employment tax returns and collecting and paying over to the IRS payroll taxes withheld from the wages of the company's employees. Let's stop here and explain what are these payroll taxes and why it is important for you to make sure these are correctly reported on your W-2 form, the form that your employer should provide you with at the end of the year. Please bear with me as we have this short tax class. When you work as an employee, your company should withhold and pay to the IRS 3 taxes from your salary. The income tax withheld. This is going to show as a credit toward your tax liability when you do your taxes, and based on it, you might get a tax refund at tax time. Then we have the Social Security tax withheld, which represents your contribution toward your Social Security benefits that you will receive when you retire. And finally, we have the Medicare tax withheld, which represents your contribution toward your Medicare benefits that you will receive when you retire. You can see these impact your financial situation, and you should do your due diligence to make sure that your employer does the right thing, especially if you work for a smaller company. Beyond what is deducted from your paycheck, the company also has to contribute its portion of payroll taxes, which includes an equal amount of Social Security tax and Medicare tax. With hiring an employee comes additional expense, something that isn't present when hiring a subcontractor. As a subcontractor, the company is not responsible for your additional payroll taxes. All they have to do is compensate you for your services as a vendor or contractor, and then handling the payroll taxes becomes your responsibility. This is a big reason why many companies prefer hiring subcontractors over employees, as it allows them to save on payroll taxes. Companies like Uber or Lyft, for instance, have been engaged in legal battles to get their drivers classified as subcontractors instead of employees. Returning to our narrative, like any other business owner, our protagonist preferred to classify his workers as subcontractors rather than employees in order to save on payroll taxes. However, when he found this impossible, he instead created fictional subcontractors, which were, in reality, entities under his control. He wrote checks to these fabricated subcontractors, his own companies, and proceeded to cash $11 million worth of these checks at a check-cashing business. Essentially, he was paying himself in cash from his construction business while claiming fraudulent subcontractor business expenses on the books to which he had no rightful claim. He did not stop here. Next, he used a portion of this cash to pay some of his employees. By doing so, he was able not to report the cash wages to the IRS. He also filed false employment tax returns that underreported the actual wage he paid to his employees. Thus, he avoided the payroll taxes we discussed earlier, and this was not a small amount. The total tax loss Mr. MB caused to the IRS amounts to approximately $2,824,577. Of course, Mr. MB added additional crimes to his portfolio. Because a poor worker he had employed in his construction business died in a work-related accident, he had the Occupational Safety and Health Administration investigating the incident. But during the hearing and while testifying under oath, Mr. MB falsely claimed that the deceased employee did not work for his construction business at the time of the accident. Mr. MB is scheduled to be sentenced on July 25, 2024. He faces a maximum penalty of 5 years in prison for each of the 7 counts of willful failure to collect or pay over employment taxes, 5 years in prison for conspiring to defraud the United States, and 3 years in prison for aiding and assisting in the preparation of a false tax return. He also faces up to 5 years in prison for the false statement. If you like to stay up to date with the latest IRS's investigations and with the latest tax updates, subscribe to our channel and give a like to this video. Thank you for watching.